Good day, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for WealthPress. Today is April 30th. The market's going to be opening up in about an hour and 29 minutes. Wanted to give you a full preview of what to expect today. We've got a lot of global data, we've got some Fed data, and we've got some hot stocks that are breaking up and breaking down. What do I always say? Let's get into it right now. It's Friday, right? Happy Friday, everyone. And it's the last day of the month and the last trading day of the month, too. So, shares rose early Europe, trading Friday, retreating in Asia after a latest batch of economic data proved mixed signals about the economy. We've had a lot of things going on in the last 48 hours. Fed data and international data, like jobless claims, like GDP, FOMC, you name it, we've had it. Two surveys released Friday. Chinese manufacturing expanded in April, but growth appeared to be slowing down. Europe's economic contracted in the first 3 months of the year, while the U.S. economy steamed 6.4% annual growth. I can hardly believe it. The contraction in 19 countries that use the euro currency compared to a robust recovery in the United States. The second straight quarter of falling output, followed by contraction in the fourth quarter of 2021, confirms that Europe is, in fact, in a double-dip pandemic recession. I hate to say it, but it's true. 2 quarters of falling output. One is defined as a recession. Chinese manufacturing, however, expanded in April. Growth might be slowing after a rebound of the COVID. China, on the other hand, has been doing better than expected. Chinese manufacturing and consumer spending have rebounded to above or pre-pandemic levels, but the recovery is slowing. Economic growth in the first 3 months of 2021 slowed 0.6% over the previous quarter, so things are slowing down. Commerce Department said Thursday, U.S. economy grew at 6.4% annual rate, better than expected or right in line with expectations. Nothing really crazy there. The bottom line is our economy is running hot right now. Majority of Americans are getting vaccinated and things are looking better. Now, we have an unemployment report this week. Let me just go to the economic data here. As you could see, we had the GDP yesterday, we had the jobless claims, we had the Fed announcement. Everything was positive. The only thing that we have left this week is personal income. Now, the market's down pre-trading quite a bit. Just to give you an expectation, we're all over the place. Look at this. Personal income last time, negative 7.1. This time we're looking for an increase of 20%. It's a moving target right now. But the bottom line is anything positive, 8.8, I'll take it, 22%, I'll take it. Anything positive would be good. So that's what we're looking for. And again, jobless claims, GDP, everything is moving in the right direction. If you look at the S&P, the Nasdaq is down quite a bit. The Dow's down 150 points, and it looked like we might have topped out in the short term yesterday. If you look at the price data, we made a swing high the day before. Actually, that's yesterday. This is today's trading data. As you can see here, volatility is really low. That's because momentum levels are just through the roof. We have the highest momentum levels in over 15 years now, and the markets are setting up for a little down move. Don't be surprised if we hit the 50-day moving average on the S&P and the QQQ before going higher once again. It's almost inevitable with the current momentum levels. But if you look at the Russell 2000, you will actually see that it's rising a little bit, and I think the Russell actually has some upside to go potentially, because it is right now outperforming the broad market, and it has a lot more speculative stocks, and speculative stocks tend to go higher faster. On average, a speculative stock that's rising gains about 6.5 times over a 2-quarter period what a large cap stock does. So keep your eye on the Russell 2000. This index is set to go higher. And again, if you look at the profile, look at the 1-year return, 68%. Look at the S&P 500, 43%. So it's about 50% better. So it's very likely that we'll see periods of consolidation or periods of a slowdown, because it's just given so much so quickly this year. So I'm still very much focused in the Russell 2000. But today, I want to talk about stocks that I gave you signals on several months back, and these stocks have been just doing really well. And there's a few stocks that I told you guys to run away from, and they're trading lower. So let's look at some of them. And some of them are giving me new entry signals. Sherwin-Williams, this was one of my favorite stocks several months ago. And as you can see here, the stock has run up since then from 240 to about 270. And I think we're going to get another buy opportunity here. I see no slowdown in real estate, in residential houses. A lot of people are using this money they're getting from the Fed to improve their homes, construction, basic materials. Sherwin-Williams paint, all this infrastructure stuff, it's going to have to be painted. Nobody likes to look at concrete before it's painted. The bottom line is Sherwin-Williams, really, really good stock. Another good stock that I'm looking for is Iron Mountain. It's a REIT. This is an interesting REIT. They do data storage. Let's take a quick look so you could see what they do. Global leader for storage and information management solutions. The stock is up 61% over the year. It's considered a real estate stock because it's a REIT, but it's got a combination of real estate and tech data. I like this stock. And last time we talked about this stock, I think it was at the $28, $29, $30 level. It's now at 40, and I think the stock is going to go higher again. I like this consolidation near all-time highs, and I like the fact that it's not a real predominant Nasdaq tech stock. It's more of a data REIT. I like REITs right now, and I like what this stock is doing. The next two stocks I've talked about extensively just about less than 2 months ago, I think. They go together. These are companies that are in the self-storage business, and since I've talked to them last, they've run up pretty good, and I still think there's a lot more upside to go. What does this company do? It's a REIT. Self-storage REIT, 64% return. I like REITs right now. I like storage REITs that are non-traditional. This is definitely, it's a self-storage REIT. CubeSmart has more upside to go. A lot of people are going to be moving from one house to another. Real estate is hot. People taking stuff out of commercial real estate, moving into home offices. People are doing a lot of self-storage, and this trend is not going away. And public storage, exactly the same thing. These two I previewed at the same time, and I told you these stocks were going to go up, and they did. Public storage started with a single South California storage building, and now it operates a lot. 142 million net rentable square feet. So there's a lot of money in public storage, 50% gain, and again, I think the stock is just getting started. I think there's a lot more upside. I like it. Went vertically for a while. It's now moving. It's consolidating, or looks like it's going to consolidate. Expect a good horizontal range and then higher prices. So two stocks that are in the crapper right now. Now, interestingly, these were two of my favorite top 5 stocks when we had the stay-at-home environment. They're doing bad right now, and I'm expecting this trend to continue. Teladoc, look at this, breaking down. People want to go to their doctor right now. They don't want to via the computers. Long term, this is a great company, but in the short term, too much too fast. Nice consolidation. What happens when you go horizontal for quite some time? You start going vertical again. Horizontal, vertical. So again, it's not always, but it's a good pattern, rhythm you should follow. So horizontal, moving into vertical. Looks like we're breaking down. If we break below this level right here, 165, there's a good chance, a real good chance, we're going to break down all the way to the base, and that's first resistance at 140. Then there's really nothing till 100. So keep your eye on the stock, and I think we're going to see further breakdown. We're already trading below the 200-day moving average, and as long as the economy improves for the near term, and I mean next couple of quarters, I'm not seeing a lot of love for Teladoc, especially with us breaking down below the 200-day, breaking below the sideways congestion with the stock market making new highs. And Peloton is in the same boat, folks. This was a great company. It is a great company. Who doesn't like Peloton bikes? But right now, people want to go out. They want to socialize. They want to party. They want to have a good time. Trading below the 200-day moving average, breaking medium-term support level. Look at this stock long-term. If it breaks the 93 level, doesn't have anything till 79, and then 66. Peloton and T-Dog on the way down. Public storage, Cube, Iron Mountain, Sherwin-Williams on the way up. Now, before I let you go for the weekend, I've got something important, crucial, timely, sensitive. There's no secret, folks, that Main Street investors are fighting an uphill battle against Wall Street's automatic trading machines. These supercomputers can execute thousands of trades in a matter of seconds, triggering massive stock runs before investors even have time to blink. That's right. But That unfair advantage, it ends today, now, right now. Now, everyday traders, they have an opportunity to make the same lightning fast profits as the pros on Wall Street thanks to a newly developed trading technology called Storm. You've got to check this thing. With Storm, members discover which stocks to get into and out of. And previously, to get out of, all held 5 days. In and out 5 days, 5 trading sessions. In on Monday, out next Monday. Folks, double-digit, triple-digit gains, stop losses, profit targets, all automated. Folks, about 80 to 90% of Wall Street is run on an algorithm. Isn't it time you get in on it too? Ready to learn how to use the strategy? Click on the link below, get more information about Storm. Do it right now. And as always, make sure to like this video, subscribe to this channel if you're watching on YouTube, and stay ahead of the market by being the first to be notified when we post new videos. And folks, you really need to check out the Storm. Algorithmic trading system, small account, high probability percentage of profit, trades large cap options, so there's plenty of liquidity. You could start with a tiny account. This is how you get an unfair advantage. And this is how you don't miss out on any of my hot stocks. Complete with stop loss levels, profit targets, everything you need. It even has a hedge. Are you ready to learn about this strategy? I hope you are. I really hope you are, because the opportunities are here, and they're here now, and they're waiting for you. But they're not going to be here forever. Time is not on your side. Check this out. Get info about link before we take it offline. Click the link now and have an amazing weekend. Bye, everyone.